Three, two, one. Hello, everybody. This is Noah from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John has the day off, so I am going solo today. So please bear with me. But let's start at the basics. I am looking at UrbanDigs supply, 7,398. That is up 2.1% from last week. And I'm going to throw that chart up right over there. And you could see that we are basically tracking exactly how last year went, which is both below the two prior years. So I'm looking at supply right now. It looks like a non-event to me. We'll go look at the weeklies. We'll see if there's anything telling there. But as far as supply is concerned, it's rising with seasonality, and we are right trending with what happened last year. Let's now shift to pending sales. 2,908 listings. The measure of Manhattan demand finally broke the 3,000 level on the way down. I'm going to throw up a chart now that is down 3.6% from last week. And this is the chart that may warrant a little bit of a concern. You know, we're still above 2019 and 2020, but you could see the decline that we're going through right now. And we're about to enter that period of time where we get to say, all right, is this a seasonal decline at this point, or is there something macro behind what's going on right now? And of course, we know that there's something macro going on, and we're going to talk about that soon. And I just want to point out that the market pulse, 0.39, this has been falling, and we are now approaching buyer's market levels. We are right there. So when I look at this chart and I think about buyers wanting to take advantage of leverage in Manhattan, you know, it's a psychological thing that buyers get more activity and more urgency when the market's going up and near its peak. But they always want to buy when there's some type of discount and leverage opportunity, like during the COVID pandemic. Well, I think buyers should take a look at what's going on in Manhattan right now, because you are in it and you are about to be in the buy side zone. And we'll see how long and how deep this goes. We'll track it, and we'll be all over it for you. So let's shift to the weeklies and see if there's any clues over there. I'm looking at 1 week supply, 392 things. That is down 13%. I'm going to throw over a chart for you to look at. And here's what's interesting to note about our market is if you look at the weekly new listings, that pace compared to the last 3 years, we are at the lowest levels. So this is not a market where you're seeing a expansion of the depth of the sell side pool. Right? You're seeing fewer and fewer listings. And as far as I could see, this listing wave, this listing season is underwhelming at best right now. So that's going to contain supply and probably not push inventory nearly as high as some of us may have thought if there was more of a macro shift going on right now and more sellers were piling in because they had to sell out of fear or desperation or any other means. I am not seeing that right now in the seasonal trends. Let's shift over to contract signed. 1 week, 157 things. That is down 6% from last week. And I'm going to throw the chart up there right now so you can compare that pace for the last couple of years. And as you can see, that is also at the lows. So we have new listing activity at the lows, and we have contract sign pace at the lows. So this is something we're going to have to keep an eye on. It's the relative change from going so fast, we keep talking about this, to going at a more historical pace. And when I look at the 1 month market ticker right now, 706 things, that is above where we are supposed to end September. So we are still above historical trend. That's why I think this market has shifted. It's kind of found its way. And again, now we got to figure out where we go from here. Either we're going to go up, we're going to stay in a range, or we're going to have another wave down, and time's going to tell, because this is the time that the deal volume should pop. This should go up to 950 by the end of October. If it does not, we need to have another conversation. Okay. So let's now shift and let's take a look at what's going on. All right. This is a story that we're all getting kind of tired of, right? It's mortgage rates, but you know, you have to respect the rate of change of what we just went through, right? And let's just put it all into perspective. Mortgage rates are mid sixes now, right? They were about the high twos almost a year ago. And when I look at that change, let's just break this up, right? I got one shift level over here. Then we went down a little bit, right there, we went down. And then we have another shift up right over here. And I can see, then we went down a little bit right there. And then another shift up, and then another shift up. You can see this is going in levels, almost like a staircase up, a big step, 3 steps up, 1 little step down, 4 steps up, kind of a thing. And, you know, we're all experiencing this, right? And we're all wondering, when does it end? Well, I want to talk about that. It's all about the terminal rate. It's all about the Fed funds futures and their terminal rate. Okay, so let's just look at a chart right now and let's look at how that terminal rate and what the market's expectations of that terminal rate. Now, when I say terminal rate, that is what the market expects the Fed funds rate to end at. That's the terminal place. That's the where and when. How high does it go? And when is that going to happen? That's basically what this expectations curve is showing you, right? The blue one at the top right over here, that is our current. That's where we're at right now. This September one back last year, that's where we were a year ago, right? Here's May, here's August. So you can see how we have changed over time. This expectation of this terminal rate has gone from 1% all the way to 4.6% right now. Okay, the Fed funds rate is right here at 3.25. They're expected to hike up to 4.6% by, let's just take a look at this, April of next year. Okay, and what you need to understand is that every single time this expectation shifts higher, okay, you can see we've already had a number of them. Here's one shift. Here's another shift. Here's another shift. And you can even break this down further to even more shifts if you wanted to over time. As this keeps going higher and as that terminal rate keeps pushing higher, we are going to see the mortgage markets and the interest rate markets, and we're going to see other risk asset markets, the stock markets, be under pressure. Okay, so this is what everybody's looking at. We're looking to see whether or not this changes. Does it go to a higher level? Does it go to 5? Does it go to 5.5? What do these dots do over here? Does it no longer go down? Instead, does this go and straighten out, right? This is what the market's looking at, okay? So I want to explain the Fed can hike. The Fed can hike from the current level of 3.25 all the way up to 4.6, and you're not going to see any change in mortgage rates unless this expectation bumps up to another level with it. If it stays where it is, or if it actually goes lower, you're going to see relief. And that is what I think our markets are trying to find before it likely ends the down cycle that we're in. So if you're asking me, when does this end? My answer is going to be, it's all about the Fed funds rate. It's all about the terminal rate, and it's all about that curve. And it's all about whether or not it's right, finally right. Is this the right level right here? And we're going to go down? Or are we still in the process of figuring out where this level is and it's going up? And if that's the case, we have to prepare ourselves for this decline to be maybe a little longer than what all of us want to see. But we're going to keep an eye on deal volume, right? We're going to look at the UrbanDigs market ticker, and me and John will follow all this data as we go and help you navigate through this market and this down cycle as we do it in real time. This is Noah Rosenblatt. We miss Johnny. It's so much better with him. I hope you're having a great time. If you guys have any questions or answers, please just visit our forum right down here. I'm going to throw up all these charts in just a few minutes over here. Other than that, this has been your weekly Manhattan market update, and I'll catch you next time.